Good morning, listeners. I am Nikhil Raka, bringing you PhillipCapital India's daily market outlook. Today is Midcap Monday, 9 September 2024. It appears that Nifty felt the impact of a weak US job report on Friday, if the day's price movement is any indication. However, the Indian markets had their own set of challenges, which may have contributed to the sell off, leading the Nifty to record its first weekly decline in a month. Notably, Friday marked the first time since August 23 that the Nifty ended below 25,000 level. This drop may not be the end, given the sharp decline seen on Wall Street after the release of August employment report on Friday. The S&P 500 had its worst weekly performance since March 2023. The Nasdaq Composite posted its steepest weekly loss in 2 years, and the Dow Jones dropped by 3% over the week. The Nasdaq slump could also weigh on Indian IT stocks, which have experienced a significant rally recently. A recent note from Morgan Stanley suggested that the upward trend in these stocks isn't over, highlighting TCS, Infosys, and LTIMindtree as their preferred choices. However, bans were the real source of selling pressure on Friday. Nifty Bank Index dropped nearly 1,000 points and the PSU Bank Index tumbled over 3%. Some brokerages are now adopting a cautious stance on Indian bans. Last week, Morgan Stanley advised becoming selective in bank investments, while Goldman Sachs downgraded State Bank of India, the country's largest lender, which triggered a 4% decline in SBI and pulled down other banned stocks as well. At present, Nifty is positioned at a key support zone around 24,850. During Friday's session, it successfully defended the 24,800 level, which will be the first important support if the market opens flat. However, if the market opens lower, there's a potential for a short-term decline towards 24,650. On the upside, any meaningful rally can only be considered if the index breaks above 24,975. In contrast, the Nifty Midcap Select hasn't experienced the same level of sell-off as the benchmark index, which is unusual. The 13,000 to 12,950 range will serve as the initial support zone for the Midcap index. If this level is breached, a further decline towards 12,800 could be on the cards. On the upside, a move higher can only be expected if the index crosses 13,200 level. Until then, the market may remain in a consolidation phase before initiating any fresh movement. Thanks for tuning in. For more thrilling updates and market insights, make sure to subscribe the podcast.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.